And we're going live. Hello, everyone. Hi, guys. Great to see you all in here. And hello to our viewers as well. Steady State welcomes you all and thanks you for joining us today. My name is Sylvia, aka Crypto Empress, and I'm here today to help you get your questions answered and to delegate the fireside chat. Any questions you have, you can write them through the stream chat and I'll forward them to our speakers. Today, we welcome Jonathan Libby, who is the CEO and founder of Steady State, Brian McCabe, who is the CMO of Steady State, and our special guests, Eric Gonzales, who is the founder and CEO of Flourishing Capital, and Will Perone, who is also the founder and CTO of Flourishing Capital. Also, a disclaimer, we are not financial advisors and nothing we say should be taken as such. This is only for entertainment purposes. So let's start by taking a look back at the previous week to see different hacks and exploits that happened in the DeFi space. So roughly 12.7 million worth of tokenized Bitcoin has been stolen from the Binance Smart Chain-based cross-chain composability platform P network. The team noted that the attack was executed by exploiting a bug in its code base, adding that a fix is already in progress. P network also offered for the hacker to keep 11.5% of the stolen funds if they return the funds. But what is interesting is that Binance Smart Chain has had more than its fair share of exploits so far this year. And I started counting them together, and altogether they were like already at 12 with this number, which is quite a lot. What are your thoughts on this, guys?
I think I'll start here real quick, you guys. So I would just say I think we're going to see this every time. I apologize. I need liquid, but we're gonna see this every time. I think when we have a new chain be operated or be launched into an ecosystem in DeFi, it took a long time. I think Ethereum is actually way safer than it was much even a year ago, because we understand a lot of the risk and we're actually really going in and diving in and figuring it out. But with all these new chains, we think we're going to solve all the these problems are still there, and it's a new chain, so it's going to be seen differently, and they're going to have to figure out how do they navigate these. And they're seeing that even if you're a chain, there are going to be new problems that need to be solved and new bugs, and you got to figure it out, just like Ethereum did. And we're going to see that probably with every chain as they start launching more protocols.
Yeah, it's much like you said, every new chain that comes out, people have to write smart contracts for it. Those smart contracts are actually very small pieces of code in regards from an engineering perspective, but it's very hard to get them completely right and consider every single possible edge case that could ever happen, right? And it's just, you could go through audit after audit, you have your white box, black box testing, like all that stuff done. And still, at the end of the day, some situation comes up where somebody found something in it, right? And as we see that, the BSC chain is really popular this year, so it's not surprising. It's been something.
Well, it's the largest chain by volume, and if you're the biggest by volume, you're just going to attract a lot of attention. There's a reason why viruses are more prevalent on Windows than Mac, just as an example, right? So same kind of idea, if you will. It's an unfortunate consequence of growth, and they've done some things. They brought in auditors. By the way, every project that you guys are buying into, if it's not audited by someone, make sure that it is, or step away. And even then, an audit isn't a guarantee against technical glitches and all those sorts of things. But I know that they brought in, a group. I believe they brought in a group called CipherTrace a while back. Binance did about 2 months ago. And so it'd be interesting to see whether the exploits are increasing or decreasing, and whether they can provide some of that expertise to the community to help bolster these things. I mean, that would really help projects. So just an idea for anybody in Binance who's listening in.
You're on mute, Brian.
Brian, we'd love to hear you.
I'm sorry, Eric. I was going to say great ideas as always. But one thing that just came to mind as you were saying that is you could kind of see Binance as a centralized network in a way, like they are controlled by an entity. They have, their own motivations to protect their network. Maybe, I mean, when I consider like Ethereum smart contracts are actually very much in my mind locked down. Like the most recent attack I've seen didn't involve attacking the smart contract, but instead changing the address on the front end of a website. So it does start to feel like Ethereum is, it's been audited, it's been checked. This stuff is getting codified and it's getting very well done. I'm just curious now whether there will be sort of an effect between like the centralized platforms, they have to pay people to audit them, whereas Ethereum is naturally audited. Will this become a divergence where there's like the tech is better? I would say open source tech is always better than inferior centralized tech, but that's me.
Yeah, agreed. I mean, DeFi to the core. It feels like there could be some measures taken. Like one thing that has really ballooned in the last, especially 2 or 3 years, is identity as a service, right? KYC, AML, you pretty much have to do any of this if you're going to have any off-ramp into crypto, right? So why not for projects, right? Why not a verified list for here's their smart contract ID, here's where you buy them on this DEX, here's where you buy them on this other DEX, here's their auditor, right? So a directory, if you will, of unassailable information. I think that would be helpful. And, if Binance could do it, wonderful. If not, maybe we can do that. And we've been talking about risk, and we will be talking about risk in this fireside chat. So this is just one of them, one of those elements of risk, right? So
to throw it back right at you just as fast, like, is Binance centralized? Because, I mean, we all own BNB. I mean, you could make a case that they're not centralized. It's a DAO.
Mm-hmm.
Well,
right.
Really, who operates the majority of the nodes on the chain? That really who controls
Correct.
Right? So
Correct.
There's the concept of a 51% attack where somebody owns so many of the nodes that are mining blocks that they can control what those blocks contain because they can write into the blockchain and they say this is the truth, right?
Mm-hmm.
That's really the core of whether somebody can do that or not determines whether it's truly DeFi or not.
That is very true. We agree. And we also saw even bigger hack where DeFinance fell a victim to an exploit with as much as $35 million stolen. So following the incident, the team suspended the platform's smart contracts to ensure the safety of more users' assets while also halting their deposit and borrow functions. So the issue is still ongoing, but yet again, so many millions of dollars lost, and yet again, another project exploited. But besides all those hacks and exploits happening, let's talk now about solutions which make DeFi hopefully a bit more positive experience. We have here today with us Eric and William from Flourishing Capital, and Flourishing Capital is building AI-powered crypto portfolios, and their new partnership is with Steady State. But what does it mean for Steady State? Jonathan or Brian, could you please give us some more insight on that?
Yeah, I'll get into this. So, working together, we're always looking to work together with great groups and great different kinds of organizations. I think Flourishing is on track to also be a strong organization. And as they keep developing their own community and growing it and building out their brand, one thing there's going to be expectation is that they're going to be protecting their communities in any way possible. And that is the whole narrative of Steady State is, we're building a narrative where communities like us can protect our communities, rather every individual in a community can maybe choose to protect themselves and moving the risk on to DAOs and other groups. And so that's kind of the major aspect of our partnership. That there's a lot more to disclose as well, I think, down the road as well. We both see a lot of different kinds of value adds between the products being built between each other, and it's very, very exciting.
Thank you, Jonathan. But Eric and Will, what will this partnership mean for Flourishing Capital?
Well, big picture. If you're going to run a DeFi insurance protocol, you need risk data. You need a risk model, if you will, right? So Steady State really is at the forefront of doing that. Well, if you're going to run portfolio management, then you also need a risk model, right? And so cementing those seeds and really sort of working together, I think we can help each other out, really sort of cement our products as being leading, both in DeFi insurance and in portfolio management, because a lot of the same data, a lot of the same analysis, right, can be done in a collaborative way. So we are super pumped to be working with Steady State. And we think they're going to be the front runners in the DeFi insurance space. I mean, there's no doubt in my mind. So definitely.
Every asset that we put in a portfolio, what Faye puts in a portfolio, has to be risk assessed. Right. So you really need a robust risk model to do that. So this can go in the obvious direction, right?
One of the most unique risks I think that we're taking on, everyone I think in the industry started, like I'm noticing a couple of groups started to take on very early, is I call it financial risk, but it's just the relationship between one model and another, one protocol and another protocol. If you think about 2008, what crashed the financial market is everyone was over-ledged into one protocol attached, like one thing attached to one thing, and it was all leading towards the same model. No one kind of realized that, like, if one breaks, then everything else taps on top of it. And I think when you're building financial models, one thing you got to really think is, say you take something like Curve, it's the grandfather. It's what's the relationship to Curve moving everything else, and if Curve topples, what's the domino effect, and how do you work around that? And that's what, that's one of the great risks, I think, in DeFi, with all the experience and background from everyone in TradFi. Everyone's always starting to track, and that counter parity risk and other different kinds of risks we're seeing, where if one breaks, what happens to everything else? It's actually a very key aspect in portfolio management. I think that it's almost even more alive and well here, I think, than normal equity markets. It's pretty insane.
It's interesting because we're starting to see a lot of indicators of how traditional markets are starting to evaluate, counterparty risk in crypto, right? Look at Coinbase's bond issuance, right? So that's just one recent example of that. So that starts to look at the psychology of that. And in fact, it turns out that Coinbase is actually doubling down and offering a larger debt raise, if you will, than they originally were planning to, because of that demand. So that bodes pretty well for investor confidence, I think, in terms of counterparty risks.
Just to add on something, it's totally not my area, Eric, but in terms of understanding what we're building here and from a marketing perspective, the amount of inputs we have into the stability of the crypto system, the stability of what's going on. I mean, when we consider what we look at traditional markets, we might look at the USD bond rate. We don't have that in crypto, but I guess we have now. Okay, how much do people trust Coinbase, the fucking A-star in crypto? So yeah, we're building, one of the hardest things, I think, and John can talk about this more, is just getting these solid data sources. I mean, we're partnering and cooperating with Chainlink on some of this stuff to cross-network feeding data, and these are going to be this bridges which are going to build this, I would say, new financial system. But yeah, it's a burgeoning ground for sure.
There's this whole infrastructure that was built out for equities around regulation, right? All this paperwork that you have to file normally with the SEC to do an IPO. None of that framework exists for crypto. So somebody needs to create a system for that, right? And this is how risk is kind of managed, with what companies become publicly traded stocks, which ones don't, things like that. Right?
Absolutely. We are missing fundamental infrastructure, and we are missing critical factors in that risk equation. That's the issue.
Very nicely said.
I want to make a fireside chat, a little bit trollish question though. People always say history mirrors itself, okay? So don't you think in some way we could be potentially mirroring some mistakes of past financial systems, just put in on a blockchain?
Yeah. Well, that's always the fear, sort of generally speaking, right? But then the question is, what mistakes are we maybe making, right? Are we putting too much trust in the Federal Reserve or the ECB or something like that? Who takes that in? Who takes that role in a more DeFi system, right? Who sets that standard? To Will's point, you can set up a DeFi sort of protocol, but if somebody controls most of the nodes, then they have a sort of a little shadow governance organization, if you will, right? So the same way that traditional FI has that, right? I mean, think about it. So the ECB has its own sort of board members, right? The Federal Reserve Bank, most Americans would be shocked to know that the Federal Reserve Bank is about as Federal Express. It's not a governmental agency. It's run by the banks. Surprise, Americans, right? You didn't know that, now you do. So ultimately, who's pulling the strings? That's a tough one. And can we replace that ultimately with algorithms and data? Big question mark.
Very nicely said, Eric.
I think we could have a chat for 5 hours about this.
I know. Yeah, how long do we have in this fireside chat? I mean, we could go on and on for this.
Yeah, true. But let's talk about then how will Steady State and Flourishing Capital possibly can integrate their technologies?
I think it's mostly just our data will be open source. What Flourishing chooses to do with their data, their strategies, it's up to them. But for us, our data will be open source and it'll be easy access for them. And our kind of communities probably be like a community to each other. And hopefully, as we move into a DAO approach, maybe Flourishing will be interacting with our DAO more than we'll be working with each other long term in the short term regularly. And as we move to a more decentralized approach, which is our goal, and our data will remain open source and keep developing and building. Alongside other partnerships we're building that are also collecting different data sources, we'll be say Flourishing, if they will be able to use that data to keep building better marks and measures, and even be able to evaluate how we go by assessing risk. Our risk assessments, I know for us, will be like open source in our calculations and how we go by calculating it, because it's hard with the data to figure out what's right and what's wrong in the space with such limited historical data and qualitative data. So when we go by evaluating, we want to make sure that we're pretty transparent so people can challenge us. And Flourishing will probably be active in challenging us and improving our system, and they'll be taking the data and using it to improve their system as well. And that's kind of the idea of the value there in the data source. And we'll be actively working together to build this together, I believe.
Yeah, and so we also have an API that we can integrate with third-party systems and things like that. So it can be a two-way integration where we're both sharing type of information and helping each other grow. And I feel like the context of this whole situation is that everybody's a responsible party, right, for the better of everyone.
Right. If we could start to develop standards around. Oh, go ahead, Brian. Sorry.
No, I was gonna say Will put that really well. Like we're here to basically help each other grow. We're both, as I see it, we're both data companies. At one point, I mean, yes, we're also like insurance company, but our product, which we input, take in, and put out, is data. So I think on this agreement, or on this like lines of agreement, we are sharing one thing, which is like Flourishing might be trying to do signals data, and we're trying to do risk data. These two things match up like this.
Perfectly said. Yes, exactly. It's risk data is a feed for us, and in turn, market signals are a feedback to risk data, right? So, and we're also partnered with some of the oracles, right? Chainlink being the most predominant one. So if you think about it, there's almost like this little sort of partnership triangle between, Steady State or Chainlink and Flourishing Capital, right? And the goal ultimately is start to just to determine and really sort of push an industry standard around risk calculations. And we can start doing that, and we can start standardizing, we start building some of these mechanisms that we need as an industry to really sort of come out of our shell and sort of up the level of professionalism, trust, integrity, and confidence in data. That's really what it's all about. Underline that last one, confidence in data.
I love this one. Great answer. But I'm going to pick one question because I believe that it goes right where we're talking about from our viewers. Sober Music Tallinn asks, could you elaborate on third-party integrations? I believe it was by something that you said, Brian? Or no?
Well, we both have APIs that are available to integrate on the other side, right? So the question could be either one for either one.
I'll let you take it, Will, to start with.
Go ahead. Oh, you want me to take it to start? Or do...
I kind of missed the start of the question here. I might have lost my connection, Sylvia. You're on mute.
We're missing your voice, Sylvia.
So Sober Music Tallinn asked, could you elaborate on third-party integrations? It was to the same topic as we're discussing right now.
Okay, well, this sounds like a question which actually perplexes me, because what if we consider third-party integrations? I mean, I could consider Eric and Flourishing Capital potential third-party integration, but as far as we've gone, we only can speak about white paper so far, which is what we aim to do. We don't have any aims to store data, make like our own use of data. Right now, we're looking at open source. I know John's ready to speak behind that mask about what we want to do with data. But in terms of how we can integrate what we want to do, I mean, what we want to do is work with everyone in the space who has something that can sort of feed into us, who wants to speak with us. I think all of crypto and DeFi especially is very collaborative. And these collaborations are the reason why we're all here. There's a reason why the best programmers in the world go to passion projects. There's a reason why people build the World Wide Web. I think the best guys in the world know this is where it's happening and we want to collaborate. That's how it goes. That's why we're here.
Mm-hmm.
Yeah, I feel like it's responsible when you have a system that is built well, that you should have the ability for other pieces to connect to it like a puzzle, right? And then you build something beautiful together.
Nicely said. But let's move on and discuss now more about crypto investment overall. What are different investment strategies in crypto? Maybe you guys could share your favorite ones. And also, what are their pros and cons plus risks? So let's do it in a way that each of you can name your favorite crypto strategy, name what are its pros and cons, and also name what are the risks.
My favorite, the most fun one, is not the one I usually use because it's really stupid. I'll be honest with you, but I do have fun. Actually, we make a game out of it with a bunch of guys. But we'll have drinking nights where we go try to find the highest 1,000 APY moon on a token and try to get as much of it as possible and get out before the token dunks, and then you actually may lose more money than you. It's a joke we have, the game, and how many positions you can get. It's actually really, that's what I do for fun. What I usually do is I actually use I just use capital aggregators now because I don't have no time right now to work really heavily in the investment space. So I just use aggregators and different kinds of yield systems that are just naturally there and strategies already placed. But my most fun is degenerate. But the one I usually use is very basic, smart, middle American. How do you invest money right now? But,
yeah, I think for me, there are active traders and, chart watchers, and I can chart watch with the others. But for what it's worth, I'm actually pretty terrible at pattern watching or pattern identification, if you will. Will is phenomenal at it. I'm not. And so for me, that screams passive investor, right? Being able to put together a diversified portfolio. So I don't just, lunge into Ethereum or lunge into Bitcoin or lunge into Cardano or lunge into, Flourishing AI, right? So now we've got a token as well. So hooray. So I think that's probably a good long-term, all of those are probably good long-term investments. But the key for us is being able to use our platform to diversify and come up with a portfolio that is decorrelated. That one is huge, right? So to the extent where one goes up, the other one, one goes down, the other one kind of holds or stays put. Over time, what happens with decorrelated assets in your portfolio, if you have applied the right strategy and the right risk adjustments to it, you'll actually win over time. Any given day, any given week, there might be, moon coins that just jump up, but then you're dealing with sort of the bag holder situation, right? Who's going to be at the end of that stick, if you will, right? But if you build a diversified portfolio and you start looking into all different segments, and diversification doesn't mean decorrelation alone. It means, investing in data companies, investing in sort of retail front end like Flourishing Capital, in, protocol runners like Steady State and so on. So building a diversified portfolio of different services into crypto ultimately allows you to grow with the industry. And that's the key. This industry is going to grow. If we sit back and do nothing, just holding, you will grow. But then the question is that if you have a proper decorrelated portfolio, can you grow with less volatility? We think the answer is yes.
I obviously have no experience investing. I have no idea what I'm talking about. Yeah.
That is the modesty statement of the year.
You guys are funny. Yeah, I think the funnest strategy that I had tried, well, one of the first I ever tried, was basically just arbitraging stablecoins. And now that there's these various wrapped versions of cryptos too, you can kind of arbitrage those as well between dexes and between chains, which is also kind of interesting little thing to do. And that is very kind of low risk strategy that you can do that don't see a ton of people talking about it.
There are soon to be, I think they're actually out now, is Euro stablecoins too. So you not just changes between USD stablecoins, now Euros, and that's like, oh God, I don't even know anymore. Like that's some crazy forex, man.
Yeah, one of the commands we had added to Fay was this ability to route, because crypto like works kind of like forex, where you can basically go from this coin to this coin to this coin, and you make this circle, right? You end up back with the original one, right? So there's thousands and thousands of ways to kind of do these routes, right? So one of the things we did was we added this command to figure out the optimal route from one coin to another one, and some of them were really obscure. It would go to like rubles, to euros, to like Cardano, to like some other. It's like stuff that you wouldn't believe.
Like how?
Right?
Will, this is like the perfect 10 p.m. chat for me. I want to talk to you more because I'm this person. I need to control my words. It's 10 o'clock here. The kids are asleep. It's okay. But arbitrage was one of the funnest games I played back in 2016, 2017. I don't want to say the words free money, but there was, if you had like connections to banking systems in certain countries where crypto was overpriced and you had a way to cash out in another country, you literally had free money. And this is like a testament to me about how like crypto is underutilized, because like there was all the people like me who would max out their ability to use this arbitrage opportunity, but eventually you only have so much capital, right? And still the opportunity was there for anyone else who wanted to come in, but there was still like, at the time, 2017, there was a big boom in Korea. My cousin was living there, and whether you put it one way or not, we made a sort of money in, money out system out of the country. And that was one way of getting crypto into the country, but also I believe in sort of a macroeconomic sense. If there is this kind of like inflation spikes where crypto is plus 20% in Korea, it's our duty as crypto enthusiasts to make sure that we can supply the capital to regulate the market, to make sure that this is like, it's not we have our own little job as our own little Federal Reserve, each and every one of us, I believe, in crypto.
That's very true, actually, if you think about it. But it's easier said than done. Like, anybody here has applied to get a foreign bank account will attest to, myself included. It is, like I said, easier said than done. I can do that in practice. But you're right. It is ultimately the right thing to do to kind of make it efficient, right? We talked about this idea of efficient markets, efficient frontier.
Well, sorry to interrupt you, but for me, efficient market was making money. And that's opportunities people will take, and that's how markets regulate themselves too.
Exactly. So is off-ramping as a service, turn it on and off, right? Is that something that we're about to see in the market?
I think it's called OTC, maybe.
No, but yes, that's true. But usually that requires larger sort of transactions, right? What about on a smaller scale and much more decentralized? I don't know. And what is the sort of risk around that?
As far as I know, it's happening on the peer-to-peer level right now. John, you're still muted, but you're able to talk. I was previously working with Paxful, which very much like if you can imagine how money works in Africa, people don't have a bank account. So they go to a person who's their arbiter. Yeah. And very much there's people who are starting to act like crypto arbiters in Africa, who would do the same thing as like a money changing person. And this is becoming like a legitimized sort of, I don't have anything more to say on it, but it's becoming sort of I lost my train of thought, guys. Sorry.
No, it's fine. The thing is, like, you have to ask yourself, why do you even need fiat, right? Isn't it the whole point of crypto taking over? We have stable coins that are pegged to various global real fiat currencies. The only reason you need cash is that somebody on the other side has decided that they don't care to accept crypto for a payment, whether it's like a mortgage or utility company or some other very outdated 20th century type of infrastructure, right? These people will naturally over time just come into the fold. And then this is where things are going to get really interesting. Like, what's the point of fiat anymore at that, right? What's the point of even having it?
Very good point. And to end this one, I'm saying my strategy is buy high, sell low.
Your strategies, yeah.
Well, thank you for buying high and selling low. The rest of us appreciate you doing that, taking that hit for us.
You're welcome. How should we approach risk management in DeFi? Any thoughts on this, guys?
I think
Go ahead.
there are kind of three main categories you got to think about with risk in the industry. So the three kinds of risk you got to be considering in the industry is that, again, that financial relationship risk. What is the likeliness of, like, if one thing falters, how are you going to go? And then I think it's credit risk, and that's kind of like your financial risk is like more. I always consider that kind of a counter parity. Everything's relationship to everything. And there's credit risk, the likeliness that one just simply can default. And then there's the likeliness of the code, the technological, and what are these impacts here that, and this, I'm not talking about trading, I'm just simply industry-wide, just what you're accumulating. Obviously you can talk about outside the ecosystem, but in the third and within the ecosystem is, I would say is, well, it's four, I would say, but third I would really consider is like technological and the likes of a breakdown of code. And the fourth, I would say, is like token price movement and sell pressure. But that's, it's always a risk in any equity market. But those are kind of the three kind of like DeFi financial risks. You have the normal financial risk of breakdown in the code, the normal risk of one business breakdown. How does it impact other businesses? If one actually faults in general, and the third major risk, I would say, that's that is the technological risk. And then there's always a normal financial risk. But they can all go into that probably. I bet Will knows all of them. Those are the three main categories, I'd say.
Well, there's, risks on it basically, I think, in my opinion, depends on the time horizon, right? On the types of risks and the stage of the company you're investing in, right? I would analyze the risks for a large cap crypto very differently than a startup, or a recent one, things like that, right?
Yeah. So for a large cap, for example, number of derivatives to that project or other projects that are using their information. For a smaller cap, project or newer project, much less of a weight, right? So it's a more of a weighting thing than anything else.
Anyone else wants to add? No? All right. Then I think I'm going to ask you our last question. What do you guys see as future opportunities in crypto investment? We slightly touched that topic last time as well, where Jonathan mentioned something about DAOs becoming the next trend. But what do you guys think?
I think DAOs, if you get it right, can be really foundational and transformational. Corporate governance is the way it's typically done is very slow and archaic right now. And DAOs, if they're done correctly, I think can really revolutionize the whole industry. But I feel like on the other side of the coin, DAOs can also easily end up kind of just directionless as well. So that's the thing that you need to guard against. So it's an interesting balance.
I think there will be a little bit more of a linkage between tokenization and NFTs, right? So one of the risks that Jonathan brought up is, not just financial risk and technology risk and sort of systemic risk, but then also you have things like, are you insuring NFTs now, right? In the traditional world, right, if Christie's or Sotheby's certifies something, they have to go by an insurance policy. They are in fact certifying their certification is in fact correct, right? So it's a risk associated with their ability to detect a fraud, right? So do DeFi protocols take care of that in the NFT space? Do we even need that kind of insurance risk? So that's a whole area to swim into. That is particularly true as companies will now issue both tokens and NFTs, and I think you're going to see those more coupled, right? Here's your token, here's your NFT collectible because you were among the first, right? We're doing that. So.
Great play, by the way, as well, I must say, Eric. To be the first is always great, and people to that. But one thing actually I was thinking is just network effects, because I'm thinking about cryptocurrency personally is one of the great revolutions similar to internet. And one of the things that made internet a great place to prosper was the fact that it was completely open source. You can make your own place here. The rules are all fair. Everything is open. And what I think has started to sort of quell or maybe dampen some interest in what would be called, I don't know, we'll call it Web 1 internet, is that it's become centralized. It's become super centralized, and it's Amazon, Google, so on. So if you want to make innovation on the web, you need to go to Play Store and give them 30% commission of your money. And I think we're seeing the smart people who are learned, who know about technology, who want to build great stuff. They're in DeFi, and that's what we're doing. And I'm very much happy to be part of this place with you, John, Eric. And the fact that we're all here talking together is a cooperation. We are seeing that this is going to be something big. I don't want to be a huge evangelist, but I'm 100% in here, and like we can talk about this for 3 more hours off camera if you want, guys.
Totally. We'd love that. You know, it's funny. I used to work for a data center company. I mean, all the large players in the space, Facebook, Google, like they all put servers in that data center. This was before AWS. And one of the things that our executives used to talk about is that centralization rises up the stack. Right, so there's the IP stack, TCP stack, then you have the HTML stack, and right, so or think about it this way: Web 1, Web 2, Web 3.
Way too low.
Exactly, and so what happens is that the centralization you're talking about in most of the world is at the sort of the telco level, right? So the last mile, if you will, and where people access these services, right? So there's a big issue right now between content companies becoming, infrastructure companies, right? And do they prefer their own infrastructure? It's a little bit like, paying a toll if you drive a Lexus, but not if you drive a Tesla. Is that fair? Well, that's how I explain it to folks who aren't into sort of the, Web3. But it's starting to move up the chain. And here's the real interesting question. Can Web3 kind of firewall that off so that there is less centralization via these DeFi protocols? Big picture question that probably requires hours of parsing on the individual scale, right? But that ultimately is going to be something to watch, I think. You know what I mean?
DAOs are the way, but also we think that owning shares in Google was the way, and it hasn't worked out.
Exactly, right? That's the problem. Can we firewall it in a way that Web 2 wasn't able to do, right? Because now that centralization is crawling into Web 2. Talk to anybody, who is on Facebook, right? They're only on Facebook. My mom, right? Only on Facebook. Like for her, web and Facebook have become synonymous, right? Much to my hair-pulling exasperation sometimes, right? But, so those are some of the things that we have to prevent. So where does Web3 start to become Binance? Where does Web3 start to become PancakeSwap or whatever the case may be, right? That's what we have to firewall against. And how do we do it?
I don't
know.
Political statements, but I want to always keep an eye on the Binances, keep an eye on the centralization. It's 100%. Not the centralization that will build us.
Yes.
We saw that with kind of even the DEXs that came about, right? We have.
Well, they were a solution to a centralized problem where people started asking for KYC everywhere, right, Will? That was like I've always said I was a centralized crypto guy. I was in Bitcoin, and then I came here because literally the real use case are being pushed out, and this is where it goes. Now we need to.
This is where all the fun is. This is where all the growth is. This is where all the interesting people are. And how long can we sustain that, or can we sustain it indefinitely?
Also, one of our viewers asks regarding this topic as well, since we're talking about Web3 and Web4, they are asking, Web4 is also a thing, right?
I don't know. Is it?
I'll be the ignoramus who probably asked the question, what do you mean by Web4? I have no idea what that is.
Web4 is like basically wearables. You're talking about... We're going to Neuralink here. I don't know. I haven't got enough on it yet. I want to stay focused on the future of like what I can't even predict yet.
Yeah, the Matrix. We'll all just plug in.
Yeah, it's ultimately going to this ultimately going to this place where I think way in the future, mankind and technology will be merged together in some interesting way, because we will just have exhausted everything that we can do without doing that. Does that make sense? You just won't be able to physically type fast enough and make programs that are interesting enough or more that move the ball forward anymore without being integrated directly into some kind of.
That's a nice version, yes, Will.
It's funny, in our parents' lifetime, every company became a services company. In our lifetime, we became a data, every company is a data company. What's next, right? Is the next generation, everybody's an experience company? I don't know.
And
pure wild speculation.
Very good question about this data, because one of our viewers, Katie Peary, also asks, I think it's both for Steady State and you guys as well, are you guys going to sell user data?
For us,
no, we're not even going to at all. No, absolutely not. We're on the blockchain. Everything's public. What can we sell? You're all in the ETH skin, bro. Or it's there's nothing there that for us to. We're not here to exploit. Everything will be open source, and we do evaluations. Everything when it comes to data. We are not a data company. The data we provide is a service to the community.
I would agree with that 100%.
Go on ahead, Eric.
Sorry, Brian. I apologize. Yeah, I would agree with that 100%. I think the one thing that we sell, if you will, is market signals based on analysis, and that's it. But user data, never. I mean, that is a complete violation of trust. It is unethical, in my opinion. That's how far I would go to describe it. Sorry, Brian.
I think you give me a perfect segue to come in as the marketing guy. That what is user data in DeFi anyway? It's an address you use this code or not. So let's talk about user data as how much you want to disclose, as opposed to what is disclosed.
That's a good point.
You're already doxed, bro. Like if you, you know what I mean. It's like
we're here.
It's a joke, but if you're on EtherScan, your data is already public. So for Flourishing, that's a different consideration. But for us, there's nothing for us to take advantage of. We're not gonna. Our system will ideally be autonomous as we keep evolving.
How doxed are you?
Go ahead.
This can be a topic for next week. But how doxed are you on the blockchain? I'm really curious.
I think the key is that
people can't seem to hack anymore. So
if I mine my own Bitcoin back in 2011 and I'm still using them, am I doxed? I'm sorry, John, to take this off topic, but it's a good question.
It is. Yeah, I don't know. The last mile is linking identity to all of that blockchain transaction, because you're either a wallet on the blockchain or you're a person, right? And that's why this whole KYC thing exists, right? Is to create that linkage. Once that linkage is broken, forget it, right? Off we go, right? So.
Yeah. But I think that's it. With we also have one last question. I just have to, because it's from our viewers. Trading Knowledge wants to know. You can give us a quick, short answer. Your thoughts on fractionalized NFTs?
Fractionalization's cool. It's a really cool aspect. I'm a derivatives nerd, so fractionalization. Anytime I can go DY/DX on anything, I get pretty excited. And DX/DY, but it's fractionalization's great. I think it's a great concept. I'm excited to see what it's going to be in the future.
Love derivatives. I wonder to what extent we tie that to real world assets and we have fractionalized ownerships. That is going to be real fun.
Yeah, it's starting to get down this world where if you have an NFT, but it's fractionalized, how is it different than owning shares, right? It's an interesting kind of conceptual thing, right?
I've heard about this concept about fractionalizing NFT art, having a share in the Mona Lisa, but I can also imagine 50 degen guys tearing up the Mona Lisa, going, "No, here's your piece." It might not happen, but I actually do think it's a nice way to art is, to be honest, one of the commodities of the world which is just a store of wealth. And if you consider this as a good store of wealth, then why not be able to fractionalize it, buy into it through NFT? I know people are doing timeshares and some stuff through property rentals like this too. That's also a really good use case for that.
Thank you for sharing your thoughts and ideas. And that's it. Many thanks to you guys, Jonathan, Brian, Eric, and Will, for joining us today. A great new partnership has been born, and we're waiting with excitement to see what the future brings. And thank you.
I'll be talking to these guys afterwards. I think we have a proper how do I say it? way to go forward here. Thank you, guys.
Yes.
100%. We're really excited about it. Thank you, guys.
Nice. And thank you, everyone who tuned in. See you guys next week. Make sure you join Steady State's Discord and follow us on socials. Take care. Bye.
Ciao, ciao.
Nice job, Brian. Thanks. That was a lot of fun.
It was fun. I always try to be like the random character, to be the wild card. But,
I know. I love it. I love it when people take on controversial stuff. It's great. So,
you just
all right. Thank you, guys.
A word swamp and absorb it. Don't. Yeah. Anyway, this channel